The stock market is again overwhelmed by fears of inflation, recession, and the banking crisis. Investors are raising doubts while monetary authorities are trying to soothe the jitters, so high volatility is setting the tone in the global financial markets. The final session of the week is going to be anxious. Wall Street is sensitive to any news on the banking sector. Apart from the economic calendar and the statements of regulators, traders are monitoring the news from companies in the financial sector. Amid a rapid change in the market sentiment yesterday, the benchmark indexes closed with a muted growth. The Dow Jones rose by 75 basis points or 0.23%. The Nasdaq climbed by 1%, and the S&P 500 grew by 0.3% to close at 3,948 points. The pre-market on Friday was gloomy, and the major stock indexes traded lower in a sync. Today, investors will have to digest a series of economic data and speeches. The economic calendar is taking a back seat as investors are focused on the Fed's policymakers, anticipating clear signals. The S&P 500 is expected to trade indicated between 3,870 and 3,990 points. The three key indexes gyrated yesterday, and the rally of hope ended in nothing. In the late New York session, the market found a glimmer of hope. Falling yields of U.S. Treasuries, in particular yields of two-year Treasuries by 18 basis points, enabled a strong performance of the Nasdaq bullish stocks. Wall Street analysts suggested various interpretation of signals from monetary authorities, mixed market sentiment accompanied by turbulence, and the wish to cut risks trigger sharp price swings. Regional banks still reveal anxiety, and the index of regional banks dropped by 3%. The banking sector sub-index fell by 1.2%, the lowest level since November 2020, more than 40% down from the record high printed in February 2022. All central banks which held policy meetings this week raised interest rates. They signaled that inflation is high on the agenda nowadays, posing the most serious risk to the financial system. Notably, regulators downplay the adverse influence of high interest rates over the financial stability. Investors have the polar opposite viewpoint. From 11 sectors in the S&P 500, only the high-tech sector closed with gains yesterday. Investors were captivated by the following market moves yesterday. Shares of a First Republican Bank slumped by 6% after a speech by Janet Yellen. Shares of a chip manufacturer Nvidia climbed by 2.7% after Needham upgraded the price target for the company. Shares of the crypto exchange Coinbase nosedived by 14% because the U.S. Securities and Exchange Commission threatened to file a lawsuit against the company again. On a Friday, futures on the U.S. stock indexes sharply went down as investors voiced concern about the health of the banking sector despite assurances of monetary authorities. Central banks try to convince markets that they will certainly take emergency measures if needed. Investors view such remarks as the fact that regulators and the U.S. government are still worried about the scale of contamination. Shares of the top American banks such as the JP Morgan, Wells Fargo, and the Bank of America declined by more than 2% in the pre-market. Shares of a domestic lenders such as the First Republic, PacWest, and the Western Alliance shed from 2.1% to 2.8%. European banks also came under pressure. Market sentiment turned sour after the report that the US launched an investigation into credit use, and UPS shares of the banks listed on the US exchanges sank by almost 6%, and most market participants believe in a pause in the rate hikes that will be announced by the United States Fed in May. Yields of US Treasuries have been falling for 3 days in a row, and yields of 2-year Treasuries are recorded at 3.6%. US Treasury Secretary Janet Yellen plans to take extra measures to protect bank deposits. A day earlier, she said that full insurance was hardly possible, and last week banks borrowed $110.2 billion, benefiting from the Fed's discount window. A considerable decline in emergency loans means that some lenders cannot receive funds from other sources. Now, markets believe in a recession in the United States and rough landing. At the same time, macroeconomic data indicates lower demand and might prove the efficiency of the Fed's policy moves. Durable goods orders in the United States again slipped by 1% in February, following a 5% slump in January. The forecast suggested a more moderate fall of 0.6%. Later today, investors will get to know US PMIs and also take notice of the comments by St. Louis Fed President James Bullard on the US economy and further monetary policy. With such events ahead, trading may again spring surprises, so stay alert. The US dollar index is enjoying its luster, trading at around the comfortable high of 103.10. The index rebounded intraday from the lows and recouped some losses. The greenback advance was driven mainly by a fall in the euro and the Swiss franc. The intraday corridor for the index is seen between 102.70 and 103.50. The euro tumbled against the US dollar because traders are unnerved about banks. Even upbeat PMIs, which came in better than expected, could not cheer up market sentiment. Shares of Deutsche Bank plummeted by 14%, and thus increasing worries about the resilience of European banks. The US dollar index instantly rebounded by 0.6% to 103.26, though retreated a bit. The time of banking and credit shocks contribute to the US dollar's growth. Looking back at the financial crisis of 2008, the US dollar surged by more than 10% since the crash of Bear Stearns in March until the crash of Lehman Brothers in September, and then by another 12% by the year end. Bearing in mind the Fed's stance unveiled on Wednesday and growing interest in safe haven assets, the US dollar has a fair chance at least to consolidate at the March high of around 105 points. The Canadian dollar lost all its advantage, gained to meet the weakness of its American rival. The USD CAD pair traded higher at 1.3770 or 0.5% up in midday. The instrument is expected to trade in the intraday corridor between 1.3720 and 1.3820. Unlike the United States, retail sales in Canada expand robustly, which is bullish for the loonie. Nevertheless, the macroeconomic data is of a secondary importance if the United States dollar is rallying, while oil prices are trading sharply lower. Oil prices steeply fell on a Friday amid a decline in the shares of the European banks following the statements from the US Energy Secretary Jennifer Granholm, who said that it might take a few years to replenish strategic oil reserves. This dance energy demand, and both benchmark rates slumped by more than 3% intraday but regained some losses later. Brent crude slipped by 2.12% to trade at $74.19 a barrel, and WTI tumbled by 2.5%. No crude sold at SPR storage means a serious blow to the prospects of a further oil demand. The White House stated in October that it would resume buying oil when crude trades at below $67 or $72 a barrel, and Jennifer Granholm told lawmakers it would be hard to buy oil at low prices to replenish the reserves. The crypto market is trading in the red, parallel to the US stock market, having shed 2%. Bitcoin traded at $27,700. Altcoins such as Ethereum, Solana, Ripple, and Litecoin are hit by sell-offs. The popular tokens lost from 1 to 4.3%. Despite the pessimistic opening in the crypto market, Bitcoin is clinging to the conquered highs, unwilling to dip below 27,000. Still, the flagship crypto cannot overcome the level of $28,500. The price move looks like a bullish consolidation, which could last for a week or longer. Meanwhile, investors have rekindled interest in crypto futures and option contracts. This pushed digital assets quotes up and pumped up a trading volume of derivatives. As a result, open Bitcoin contracts reached a record high. Larger trading volumes of derivatives compared to stop trading prove that investors are more interested in speculations on Bitcoin price moves than in a long-term storage. Bitcoin is likely to rise in the short term. Besides, Bitcoin surged by 22% in a month. It has leapt by 65% since the early year. The fact that the flagship crypto has been able to survive pressure from governments and financial headwinds proves its resilience and popularity. The intraday corridor for the token is seen between the same borders. If the price settles at 27,750, it will appreciate to 29,200. Otherwise, the price could test the level of $26,900. Good luck in your trading and have a nice weekend. See you on Monday.